Thank you so much for joining us here on a Monday. I'm Marlin Bohling with you, and I am joined in studio by our, well, very welcome guest, Chris Swift of Swift Trading. He's based in Nashville. Always good to visit with you, Chris.
Good morning, Marlin.
Yeah, hope you had a good weekend.
Oh, I did indeed.
Okay, we have the market trying to decide, is the rain a good thing or a bad thing today? And of course, we have a lot of month-end positioning going on. We have the big reports coming up on Wednesday. Let's take a look at what the markets are doing right now with our quotes provided by Bar Chart. Chris, we have September corn gaining 10 3/4 cents. Whoops, now up 11 1/4 at 541 1/2 right now. It had been as high a little bit ago as 545 1/4, and then it kind of ran out of gas. The December new crop corn is at 530 3/4. That would be up 11 1/2 cents at the moment. Now let's switch over to the soybean trade and see what's going on over there. We have August soybeans. We'll go with that. 16 1/4 higher at 13.19. Believe it or not, we had a low overnight of 12.99. Interesting. And then it bounced away from it. November now 21 1/4 higher at 12.91 per bushel. And that would already be about 23 cents or so off of its earlier low from last night. So we're within about 4 or 5 cents of our high so far at this time. Pretty strong gains. What do you think of this action?
It's a combination of a lot of factors here. Clearly, it didn't get the rain in certain areas, especially in the Iowa areas and Minnesota, Wisconsin, where they really drought deficit right now and need some help, and they're just not going to get it. It doesn't look like. And then we have this report that's coming up on on Wednesday. And although the acres report seems to be a little heavy towards both corn and beans, it'll be the grain stocks is what everybody will be paying attention to because we are so tight coming into this September delivery.
Now, what could affect that on the stock side?
You know, probably sales, more export sales that we've seen in the readjustments, maybe some other disappearance. A lot of times that will come in. What we haven't noticed is any cancellations. So we're not looking for a build of any kind. More likely than not, it comes out with the 1.1 billion bushels of what USDA said in June, 1st of June.
Is that common to come up with adjustments in this particular report?
Yeah, because this is a grain stocks report. This is what this is the grain stock, quarterly grain stocks report. So yes, they could have some adjustments to it, but I think when we're looking from last year, it might be just a little bit lower than last year, maybe dead steady with month over month.
All right, now the wheat harvest is underway, but we had a higher start today, which is kind of intriguing, in the middle of wheat harvest. Let's take a look at what our market is doing. We'll go to Chicago wheat and take a look there. September, 14 cents higher, now 13 3/4 higher at 654 1/2 per bushel. That's a pretty strong start to the week. In Kansas City, look at this, 17 cents higher on September at 626 per bushel. And Minneapolis wheat overnight was very strong, and it's adding to it now. September, 30 1/4 higher at 838 1/4 so far this morning, within a couple of pennies, about 2.5 cents of its high of the day. All right, what does the future hold here in this wheat market as far as marketing potential, from your opinion? Should producers maybe sit back and be patient?
Well, with the spring wheat, probably so, because it doesn't look like they're going to get any hopes whatsoever. And with 73% of the crop in the poor to excellent category, there's not a lot of it. In the others, though, I think it's a heavy competition of protein to the corn. So we see that corn and wheat prices are literally side by side, and we know that as a tendency, corn sometimes holds a pretty steep discount to the wheat market, but now with them side by side, you have to believe that a lot of that is nothing more than just the protein content of each feed substance, and the shortages of both right there are going to make for some interesting next 2 months.
Interesting, yeah, exactly right. Okay, we'll pause right here, and then we'll come back and we'll take a look at our livestock trade. Could be interesting there, too. The hogs were off to a fast start this morning. We'll see what they're doing when we come back. We're talking with Chris Swift of Swift Trading. He's based in Nashville. Chris, on the livestock summary that we had last Friday, the market, as far as cash cattle market activity, I noted where USDA said, well, we sold a few head in Texas. They only brought 118, and I have a hunch that was probably just some leftovers that I think the vast majority of trade during the week, wasn't that more like 122?
122.50, I think, is what USDA came out with the average. 126, some top-end trades in the north, and most of the cattle traded 120 in the south.
That would seem to be backed up by the dress basis sales there that showed 197 to 201, and that's basically what we saw for the range almost all week, right?
It is. Not much has really changed in there, and we're still dealing with very slow processing speeds, so until we can get those processing speeds brought up, it doesn't really matter a lot what can go on here.
What's going on then with the cash live hog price nationwide, down $7.48? Carcass basis hogs over 70 cents higher a hundredweight. How does that work?
Well, I think we have seen the Hogs and Pigs report came out, and it wasn't as bearish as what we thought it was going to be, but the cutout has been dropping precipitously. The belly market has really taken a big hit the last couple of days, and now that we've seen the index start to trim a little bit lower too, the futures part of it collapsed last week, coming back just a little bit today, trying to make up some of that basis spread.
I'm glad you brought that up. In fact, we can bring up the beef cutout values and the pork cutout values as well from Friday afternoon. The beef cutouts, the choice cuts, again, were lower, down 286 at 304.56. You know, they keep this up another day or so, we're going to be under $300 again. The select cuts were just 4 cents higher at 276.18. That spread $28.38 now. It had been close to $40, I believe, here a while back. On the pork side, the carcass values were down $2.95 at 110.04. In fact, all the primal cuts were pretty much lower across the board. The hams were down over $7.50 Friday. Bellies down $6.74. So it had an uphill battle when it comes to the wholesale trade. Let's look at what the futures are doing right now. We'll go to the big board and look at live cattle. We have August currently $1.12 lower. We're at 121.67 after a high right out of the gate of 123.20 this morning. So we're within about 35-40 cents of our low of the day in this live cattle trade. August leading the way down with the biggest loss there. If you look at the feeder cattle trade, we currently have the August contract $1.92 lower at 157.62, and that would put us $2 under our earlier high this morning. We have September down $1.37 at 159.87 right now. And with our quotes provided by Bar Chart, we have August lean hogs limit up, $3 higher at 102.77. Now, how did that happen here? We've been going limit down and expanded limit down last week. What happened?
High volatility.
Yeah, but
that's the only answer. The basis got skewed really quick when the futures dropped off so fast and did not have time for the index to catch. But the index was down over $2 today. So again, it's probably just some basis evening up.
That's a smart guy right there. Anyway, interesting stuff. Yeah, so now another limit move in the lean hogs going the other way this time. I appreciate the help. Chris, come back anytime.
I appreciate that, Marlin.
Appreciate the help today. Chris Swift of Swift Trading right here in Nashville. Janet, back to you.